Good morning and welcome to Top Gun Options Market SITREP or Situation Report, your daily morning intelligence brief with Matthew Buckley. My call sign is Wiz, and have a nice little sell-off at the open here, just as we predicted. These kind of weeks where we get these early rip-your-face-off rallies early in the week, we tend to give a little bit back on Wednesdays, more on Thursdays, and then usually slide into the close on Friday. And we have a nice bear call spread on the S&P 500 that's looking pretty good, with the Dow down about 86 right now, and the S&P's down about 8 and going lower here. A little dead cat bounce at the open, and then we're giving a lot more of that back. Remember, folks, today at 1 o'clock we have a live trade brief I'm going to open to the public. Remember that these round numbers, I call them magnets, right? 2,800 is a magnet. I said we'll head up through it with a little bit of airspeed, and we're going to get pulled right back down to it. That same thing happened right around 2,700. Same thing is happening with Amazon and 1,800, folks, even though they had a really they printed money during their Amazon Prime Day or whatever. A little bit of a sell on the news, right? Which is usually what happens with Amazon on these Prime Days. Really nice run recently out of Amazon, and then it usually gives it back. Nice run out of Amazon, give a little bit back. Nice run out of Amazon, give more back. Big run out of Amazon. What do you think is going to happen? Especially with earnings coming up here next week on the 26th. So actually liking this a little bit of a pullback. We're long on volatility. We have a VXX bull put spread, a trade we call a trhedge, right? It's two words squeezed together, right? A trade you want to make money on, and a hedge, I really don't care if I want to lose money on what I call a hedge, because I'm not losing money, right? If that hedge goes out worthless or quote unquote loses money, that means all my longs are doing really well. They're kind of like bilge pumps in a boat. So our VXX spread's looking good, up about 2% right now, the VXX, and our bear call spread, our weekly bear call spread on SPX is looking great. If that expires below 28.20 tomorrow, we make a full $1,600 in 4.5 days. So really looking forward to that. So if you're free today at 1 o'clock, or even if you're not free at 1 o'clock, make sure you register for our event today at 1 o'clock, because I'll give you access to the replay. So make sure you head to go.topgunoptions.com/brief. What we do here at Top Gun Options is we do trade briefs, right? I'll give a strategic brief about what's going on around the world, and Russia and NATO and oil, what's going on with China. Then we'll get operational and talk about what's going on here in the United States with the Fed, with interest rates, with earnings. And then, and only then, can we get tactical and take a look at trades. We call it SOT, strategic, operational, and tactical. We're going to take a look at that. We've had, 6 weeks in a row of winning, of profitable, all of them actually hit max profit if you stayed in them, from Amazon to volatility trades. Past couple weeks, when volatility spiked out of the gate on a Monday, we ended up selling bear call spreads into those spikes, saying, hey, volatility is not going to freak out the rest of the week, and those all hit max profit of about $2,100 on $5,000 in risk. So really, really good trading going on. So make sure you stop by today at 1 o'clock or register, and you'll get access to the recording. Okay. So again, go.topgunoptions.com/brief. We're going to cover in our 1 o'clock brief RIMPAC. I've done a RIMPAC. When was it? RIMPAC 95 on the USS Kitty Hawk. It's a huge naval, multinational naval exercise in the Pacific. It's the rim of the Pacific. But this one's different this year because of who's invited, who wasn't invited, and who we're kind of targeting, quote unquote, as the make-believe bad guy country. So make sure you stop by and I'll give you a brief on that. But this is really interesting. So and as I talked, the Dow's actually accelerating downward, which is great. Look at that. So our SPX bear call spread is looking phenomenal. I told you folks, we'll be at 2,800 here soon, or we're going to break 2,800 today. And if you're sitting there watching this going, crap, I'm losing money. Well, we're not. As an options trader, you can make money whether the market's going up, down, or sideways. Right now we have two trades on that are making money as the market's going down here. The SPX is imploding, and VXX is now up 2.5%. When we just looked at it, it was up like nearly 2%. So very, very nice trades. Oof, happy. If you're not happy when the market opens and it's down red, you don't have any hedges or trhedges on, folks. You really need to stop by at 1 o'clock. Anyway, so Russia's liquidating their treasury holdings. Sounds familiar. Sounds like China's doing that too. So a little bit of economic warfare going on here. But speaking of this whole Russiagate, Gallup did a poll the other day, You know how much Americans really care about the situation with Russia and the president committed treason the other day? Well, if you went on social media, you'd think that this country's absolutely imploding, or half of it, wants to tar and feather the president. Oh my God, you ready for this? This is Gallup, folks. Situation with Russia. It didn't even register. It barely registered 1%. Now, to steal a quote from just a phenomenal president, it's the economy, stupid. This economy is hitting on all cylinders. Hell, we might see a 4-5% GDP print on the horizon here. There should not be one person on welfare in this country. There are more job openings than there are people technically available to work. Now, I know the unemployment rate's at 3.8, 3.9, or maybe it went back to 4%. But that's full employment as defined by the Fed. Okay, so we're at full employment. This whole Russia thing, it makes for good popcorn eating on the couch if you're watching MSN or CNBC and all these people frothing at the mouth. The market really doesn't care about it, folks. Here's what and Trump's got a point. He's like, Putin ain't a threat. He's a threat because he's got as many nukes, if not more, than we do. Their economy's awful. Russia has the GDP of Texas. Trump, to his credit, is saying they ain't the enemy, folks. Here's the enemy. It's China. These people are stealing everything that ain't locked down, and even if it's locked down, they're stealing it. So the trade war is getting hotter, and the fact that the market really shrugged its shoulders the other day, or yesterday, when Larry Kudlow, so Steve Mnuchin last week, this is a sleeper story, folks. Again, last week, the financial media is frothing at the mouth that Donald Trump's sticking his finger in the chest of NATO, quote, partners. Hey, a partner is somebody who pulls their weight, or at least pays to pull their weight. And a partner isn't somebody who gets 70% of their oil from your enemy while demanding that you protect them from the enemy. It just doesn't make any sense. So that was the story last week. But the underlying story I briefed the folks here at Top Gun Options was Steve Mnuchin saying, hey, we're at a standstill. These negotiations over trade with China aren't going anywhere. Meaning we're not even sitting in a room talking. That's not good. Yesterday, Larry Kudlow came out and said things aren't looking good either, and he was supposed to be the market whisperer, remember? During one of these freakouts a couple months ago after he left CNBC and went to the White House, Larry Kudlow was out on the White House lawn twice, calming markets, and twice in one day, going, everybody relax, the adults are talking, there ain't going to be a trade war. We're in one, folks. $34 billion shot across the bow a couple weeks ago, $200 billion as the president got on the airplane last week to fly to NATO. Folks, we're in it. So remember that the market only cares when it cares, and look at the headline right now. Trade tensions weigh on global stocks. It's almost comical. We could copy and paste this headline, and in 2 days or a couple days in the middle of next week, put this headline up as the reason stocks are going down. But for the past couple days, I've seen headlines that say what? Global stocks rally as trade fears ease. They haven't eased, folks. So don't be this tactical and trade off these type of headlines. Use your thinking brain. That the only trading software you need is the 7 inches of gray matter between your ears, or 50 if you're a Marine. Semper Fi. So here we go. We are nearing the pain point triggering of the PBOC put. I've told many of our members here at Top Gun Options, keep an eye on the wow. Love it. Keep an eye on the FXI. This is the iShares China Large Cap ETF. Right about here, I said, short the hell out of the FXI. Do a bearish double vertical, do bear call spreads, whatever. Then we kind of leveled off here for a little bit. Right here, as are we going to be in a full-blown trade war? And yesterday I said, folks, it's again, I said it's bearish double vertical time. The FXI is down 2% right now. If you're itching for a bearish trade right now, pound the FXI into the dirt, because when you see headlines like this, like the PBOC is the People's Bank of China. And a put is what? Downside protection. So this headline is saying, you know what? That their Fed, let's just call it the Chinese Fed, is getting ready to jump in again and try and save capitalism because their markets are starting to do what? What they did right here. Boom. Right around here on the way up, I remember showing our members in a live trade brief a picture of it's like a fruit vendor in like Shanghai or Shenzhen, something with an S. And the dude's like leaning over his apple cart or orange cart, but he was staring at a laptop computer screen of his stocks. It was our Joe Kennedy moment. You know, when the fruit guys trading in Shenzhen, this imploded. And on the way down here, the PBOC and the Chinese government stepped in to try and save this market. They banned short selling. They banned trading on margin. Hell, they arrested 200 journalists at one point for writing negative financial articles. And eventually, they saved capitalism and the market rallied here. We're starting to see this panic again. That's the problem with government stepping in to help save the market, is the market recognizes that it must be that bad, and we freak out even more. It's like the market circuit breakers. Remember, like around the dot-com bubble, market circuit breakers kick in because the market's going down so fast. All it did was give people time to freak out even more. So when they reopened trading, people freaked out more. So you want to pound something into the dirt, pound the FXI, folks, because it is it's in trouble. When you see that the Chinese government's having to step in and save capitalism, good things aren't going on. Talked about Morgan Stanley yesterday in our Accelerated Retirement Live trade brief at 1 o'clock. Talked about Morgan Stanley and how I'm going to start looking at Goldman Sachs again. Big antitrust decision out of the EU yesterday about a $5 billion fine against Google. You have got to be very, very careful trading any of those FANGs. We don't. I'm out of Facebook. I'm out of Apple. I got out of those in the fall, and we put all of our firepower into Amazon. And Amazon ain't, there's not two A's in FANG, folks. It's Facebook, Amazon, Netflix, Google. And we know what happened with Netflix this week. There's no two A's. Amazon ain't a FANG, folks. It uses technology, but it's a services company, folks. It's a services stock. And I call it the Death Star, man. It is just absolutely printing money. Jeff Bezos is now this is $150 billion this guy is worth, which is funny because over in Europe, this really hasn't been covered too much, that there's been a bunch of riots or, strikes at some of his Amazon places because he pays slave wages and, 10-hour shifts, and people aren't even allowed to go to the bathroom. So, but Jeff Bezos is good because he's a limousine liberal, but he's quiet about it. You got Mark Zuckerberg, Tim Cook, the guy Schultz at Starbucks. I love what Schultz did. He turned his business into the world's largest bathroom and needle exchange, and then 2 weeks later he quits as the stock implodes 5%. Well done. So he can run for president. I'm looking forward to that. So, folks, we had a lot of good stuff going on here at Top Gun Options. We're going to have a great time today at 1 o'clock. We're going to review all of our open trades and maybe even take a look at a new one. So there's the S&P 500 here, folks, trying to get a little footing underneath it. This is going to be a dead cat bounce, and I think we go lower. There's just no reason to rally tomorrow into the close on a Friday. Markets usually don't like to be long going into a weekend. Why? Because anything can happen over a weekend. We got tweets, we got shows, we got the president off the cuff remarks, we have stuff going on in China. So I'm happy with our long volatility and short S&P 500 trade for the week here, and we're looking at a nice nearly $4 to $5 grand in profit on limited risk if the market kind of continues lower or even hangs out around this 2,800 points. So really happy with that trade. We're at 28.02. So as I did this brief, we even went lower, and that trade got a lot more profitable. Okay, folks, really looking forward to seeing you at 1 o'clock today. All you need to do is head to go.topgunoptions.com/brief. And like I said, hey, Wiz, I'm working at 1 o'clock or I can't make it. Check in there. Still register, and we'll send you the recording so you can view it later. Okay? So, folks, have a great rest of your day. I'll see many of you at 1 o'clock in our Analyze Your Trade and Debrief session. Happy hunting. Make sure you hedge, and God bless.